Election years bring a heightened sense of uncertainty for investors, and people often believe they should change their investments based on which candidate takes over the Oval Office. This is understandable as we are all wired to react to fear. It's behavioral finance 101. If my candidate doesn't win the election, all these bad things will happen in the economy and stocks will tank. But history shows us that over the long term, stocks have tended to reward investors no matter who is in office. Stocks have trended upward across both Democratic and Republican administrations, oftentimes for different reasons. The chart shows nearly a century of returns across different presidencies and serves as a reminder that shareholders are invested in companies, not a political party. The president is just one of many factors that can have an impact on the market. Think back to last election. If I were to tell you on New Year's Day 2020 that we would have arguably the most contentious election in US history, along with a global pandemic that would kill millions, shutter businesses around the world for months, and disrupt supply chains, would you think it would be a good time to get out of the market? With all that foresight, do you think the stock market would go up or down? Well, if you would have sold your holdings on January 1st, 2020, you would have missed out on a relatively good year for stocks, with the S&P 500 returning over 18%, followed by 28.7% in 2021. Then the question begs, when would you get back in? Would you do so at the beginning of 2022, when many people felt there was a return to normalcy? Well, that February, Russia invaded Ukraine, leading to geopolitical unrest and a decline of over 18% for the year. This is why timing the market is a fool's errand, because you have to be right twice, and major events are usually priced in by the time you're ready to pull the trigger. Getting in and out due to a sense of fear or optimism can lead to a compounding of losses and missed opportunities. This can derail a financial plan. In our opinion, staying the course with a long-term strategy, coupled with proper diversification and smart tax planning, is the best way to accomplish your investment goals. You don't need to mix your politics with your portfolio, and vote with your ballot, not your life savings. If you would like to dive into this topic further, please reach out to any of our advisors.